What about next month? Do you think the Reserve Bank may need to lift rates again?
So if we think about what financial markets were pricing ahead of this meeting, they did have a chance of another hike, but it was later on next year. So the markets were priced about 50%, or had a 50% chance for one more hike through 2024. So we do think that the risks are probably tilted to the upside for inflation if inflation does prove to be more sticky than expected. But we don't expect that as our base case at this stage. So the RBA has been quite data dependent over the last few meetings, and given that they've hiked rates today, they're likely to want to see how the data comes in over the next few months before they take another view of whether rates would need to go higher. But we did see that commitment to getting inflation back to the band in the RBA's statement today, and they did maintain that tightening bias that we've seen in recent statements. So we're certainly not out of the woods yet when it comes to inflation or potentially further cash rate hikes.
And when could we potentially see the cash rate start to go down?
So it really depends on the path of inflation and when we see inflation coming back down. So if we do get that progress that we're expecting through 2024, and if it looks like inflation is coming sustainably back to that 2 to 3% target into 2025, then the RBA may be in a position to cut rates towards the end of next year, perhaps in the third quarter of next year, or maybe even a little bit later. But it really does depend on how the data flow plays out and how sticky inflation proves to be.
Jarek, Kowcza, thanks for your time.
Thank you very much for having me.